Kyle not Kyle here. So Bitcoin had a bit of a wobble last week, proof that even digital gold can get motion sickness. But while prices dipped, the institutions kept building. From Ripple's ETF launch to central banks testing tokens. Welcome to 4OTC's weekly digital asset update. The first US spot Ripple ETF, launched by Canary Capital under the ticker XRPC, has secured Nasdaq certification and began trading last week on the 13th of November. Institutional filings from other issuers show us that a broader rollout is underway, signaling that regulated access to XRP is shifting from possibility to reality. Next, the Czech National Bank has purchased $1 million worth of digital assets, including Bitcoin, stablecoins, and a tokenized deposit. This is all part of a test portfolio planned to gain operational experience in digital asset markets. This is a classic sandbox move. The holdings will remain separate from the bank's formal reserves for now, as the CNB runs through lifecycle processes, including key management, multi-stage approvals, security, and AML compliance. And finally, the Monetary Authority of Singapore has announced plans to trial tokenized bills and roll out stablecoin regulation in 2026. Local banks including DBS Bank, OCBC Bank and United Overseas Bank have already completed a live interbank overnight lending pilot using wholesale CBDC as part of the initiative. It was emphasized that sound reserve backing and reliable redemption will be central to the stablecoin regime. So what should we take from all these developments? Well, the launch of the first spot Ripple ETF marks a turning point for institutional access because for years, XRP has sat on the sidelines of regulated investment products while Bitcoin and Ether took center stage. But now, with Nasdaq approval and more issuers lining up, I think the message is clear. Digital asset exposure is expanding beyond the usual pair. This is Kyle not Kyle. Catch you next week.